This is our Forex blog for October 17th, 2012. And like we do most days, this is a currency meter. This is a new one that we just released that, as you can tell, there's just one histogram that shows the strength or weakness of each of these. And it's based on our FX Build a Trend histogram, which now has daily, weekly, monthly weights. I've weighted the longer term monthly trend 4%, weekly trend 13%, and daily trend 18%. And the rest of them pretty much are very fast intraday statistical time frames. Some of them measure the percentage, in this case dollar pairs, that are going up or down versus other pairs, and some of them such as the range ADX trend. This other one, which I'm not using, Momentum Pro, measure the intensity. How far, statistically, how much is each currency going up or down compared to the past, or in the case of the range ADX trend, it's comparing the range 5 pips per bar range ADX for all these pairs and measuring the intensity of trends. So anytime the vast majority of the statistical tools are up or down, you're going to see it come real close to, or in some cases go above, the 80 level. And this is considered weak. It's very clear today that you want to be selling the dollar. The yen also became weak. You can see here between 4 and 5, if you had to choose one of these two currencies to trade on the short side, it would be the dollar, because the yen peaked to the upside. Now, after that, the yen resumed its previous downtrend and it continued. The rest of the day, once you see no more strength coming in, you want to continue to sell it. But it's a clear no-brainer to sell the dollar. Now, this is what our older currency meter looks like. And you can see, let's scroll forward to today. You can see that the majority of the dollar time frames are down. The real-time trend on the top, 15-minute trend, hourly, daily, weekly, monthly. A lot of traders told me that this was confusing, especially when multiple time frames would have different trends. For instance, the pound, real-time trends down, the 15 hourly trends down, daily trends somewhat up, the monthly trends somewhat up, switches to slightly up, the monthly trends down. Which time frame do you trade? It's much clearer looking at this. You can see that the pound, never really had a little bit of strength right here, a little bit of weakness, some strength came back in, then the strength lessened. And a lot of times you're going to see this kind of pattern, lots of strength, little strength, and then it's entirely possible for some weakness to come in. But if you have your choice, which you do, trade the ones that are strongest versus the weak. So the dollar, without a doubt, was the weakest one all day. Let's look at, move these back here to around midnight so we can see the Australian, very, very strong. Without a doubt, it's the strongest one. So without a doubt, you basically would want to be buying the Australian dollar, to a lesser extent the Australian yen. You'd want to be buying the euro dollar and euro yen. So now let's go to those currencies and take a look at those charts. Here's this chart, and you can look at it and see that the strong euro dollar, these are FX trade signals. They do a very good job of telling you when to sell, when to buy. The circles are counter trend trades, the triangles are trend trades. You can see this one pulled back a little bit and didn't have that much weakness. All the longer time frame trends are up. On the individual charts, I'm not using any of the longer time frame trends in the real-time build your own trend. I'm just showcasing what the real-time one is without any of the longer term daily, weekly, and monthly. You can see I give a 0 weighting to all those, and also 0 weighting to the hourly and 15 minutes. So this is very fast in identifying the trends, and it's designed, if you see a buy signal after coming down and it's getting less and less weak, you take it. And as it starts going up, if you see a lot of momentum come in there, you hang with the trade. If the market shows a little bit of strength falling off, you move your stop underneath the lows. And you can also use our trailing stops to get in and out. The real key to trading is just small losses, big wins. That's it. This is the euro yen, and as you can see, most of these buy signals worked. Went up, went up. This one here kind of went sideways and up, up, up. This one here kind of failed. small win, big win. But if you add all these up, you can see you probably made 40, 50 pips on the euro yen today. Now going back to the currency meter, you can see you wanted to be buying the euro dollar, euro yen. Another one that was clearly strong today was the Australian. And again, if you took all the buy signals, you made money, small profit. You can see this broke out over the high, made money, made money, made money, made money. You probably lost here. Made money, 20, 30 pips there. So the Australian dollar, pretty much a no-brainer. And remember, you also want to trade the Australian versus the yen. And you can see this one up, the market went up. This one here failed. This trade here worked. This one worked. This one worked. This one worked. This last one, went up about 30 or so pips. And typically most people don't trade after noon, so you might not have taken that last trade there. It was right around 12:30. But regardless, using the currency meter to identify which currencies are most likely to continue to trend, the Forex is a very trending market. But despite that, our counter trend signals work quite well too. Now, this is the counter trend signal right here and here. And these only show up. The last version of the FX trade signals I released had a ton of counter trend signals on there with a relatively low percentage win. And that's why I completely rewrote this. This is close to 6,000 lines of computer code and there's close to 30 signals combined between trend and counter trend. And sorry, I had some window pop up on there. There's close to 30 trend and counter trend signals, and there's usually anywhere from 6 to 15 rules that all have to be met for any one of these trades to happen. And one thing to be aware of is these real-time signals do not use the build your own trend, which is one of our better statistical tools. So if you see a buy signal after being so strong, once you see a buy signal, take a look at the build your own trend. If it's gone up with incredible momentum and this pullback here has less than 80 weakness, it's much more likely to work. If you see a sell signal up here and the momentum is less than 80, it's much more likely to work. This one right here, you can see it was right on the verge of flipping down. The market's kind of going sideways. It pulls down. If you were in this short trade, the fact that it didn't pull back with a lot of weakness and all the longer time frame trends are up, you'd want to exit that trade, and when you see a buy signal, ride it to the way up. These counter trend signals are also excellent places to maximize your profits. If you had bought here, see a counter trend signal, you don't have to trade against the trend if it makes you uncomfortable, but certainly consider exiting the trade and taking the majority of the pips from the trade.